First, why isn't $1 equal to £1 or 1 yen? At the surface, it feels random. A dollar is just paper. A pound is paper. A yen is paper. So why doesn't $1 equal £1 or 1 yen? Because money isn't about the paper. It's about trust. Every currency represents the strength of the country behind it. If a country produces a lot, trades globally, creates jobs, and attracts investors, more people want its currency. More demand pushes its value higher. But if an economy slows down, prints too much money, or loses investor confidence, trust drops. And when trust drops, the currency weakens. Exchange rates move constantly. Today, $1 might get you around 110 yen. Next month, it might be 108 or 112. Those small changes reflect trade, interest rates, politics, and investor confidence. If Japan sells more products to the US than the US sells to Japan, American companies need more yen to pay Japanese suppliers. That extra demand can push the yen up. So currency values aren't random. They reflect economic performance, money supply, and global trust. The number printed on the bill doesn't matter. The economy behind it does. Second, why is every country in debt? You'll hear numbers like $37 trillion in US debt, or trillions owed by China, Japan, and the UK. It sounds terrifying. But here's the key question. Who do they owe? Mostly each other, and their own citizens. When a government needs money to build roads, fund hospitals, or run the military, it doesn't just print unlimited cash. It borrows by selling bonds. A bond is basically an IOU. You lend the government $1,000 today, and maybe in 10 or 12 years, they pay you back $1,250 with interest. Who buys these bonds? Regular citizens, pension funds, banks, other countries, investment firms managing retirement accounts. So when you hear $37 trillion in debt, that money is spread across millions of lenders. Governments rarely pay off all the debt at once. Third, why can't we just print more money? It sounds simple. If the government needs $2 trillion, why not just create it? Because money only works if it represents real goods and services. Imagine a small town with 120 people and 120 loaves of bread. Each loaf costs $10. Everything is balanced. Now imagine the government prints an extra $2,000 and hands it out. People have more cash, but there are still only 120 loaves. More money, same bread. People start offering $15, then $20 per loaf. Prices rise. Not because bread became better, but because more money is chasing the same goods. That's inflation. In extreme cases, like Germany in 1923, governments printed so much money that people needed wheelbarrows of cash to buy basic groceries. Prices exploded because trust disappeared. Printing money doesn't create wealth. It just spreads the same value across more currency. Fourth, what is Bitcoin? Bitcoin is digital money that exists only online. No coins, no paper, just code. But unlike dollars in your bank account, no government controls it. It runs on a system called blockchain, which is a public record of every transaction ever made. When you send Bitcoin, thousands of computers around the world verify the transaction. Once approved, it gets added to a digital block that can't be changed. There will only ever be 21 million Bitcoins. That scarcity is built into the code. No central bank can wake up and decide to create 5 million more. That's why people call it digital gold. Bitcoin proves money can exist without a central authority. Whether it becomes the future of finance or stays a volatile asset is still being debated. Finally, what happens if inflation goes negative? At first, falling prices sound amazing. Imagine your groceries and rent dropping every month. But deflation, when prices consistently fall, can freeze an economy. If you expect a car to cost $32,000 today, but maybe $30,000 in 6 months, you wait. Multiply that thinking across millions of people, and spending slows down. Businesses see fewer sales. They cut prices further. Profits shrink. Layoffs begin. Unemployment rises. People spend even less. If this helped you understand money in a clearer way, like the video and subscribe for more simple breakdowns like this. And drop a comment telling me where you're watching from. I love seeing how global this community is.